We're all looking for smart ways to make our money work a little bit harder. So today we're going to dive into a really fascinating blueprint. The idea of turning a small $100 crypto investment into 1,000. Let's break down how it could work. So here's the big question, right? Is it actually possible to 10x your money with just $100 in crypto? I know it sounds pretty ambitious, but with the right strategy, it might be more realistic than you think.
We're going to walk through this in a simple 3-step process. But you're going to want to stick around for the whole thing, because that third step, honestly, it's the crucial moment where most people's plans completely fall apart.
Okay, let's jump right into step 1, building the safe foundation. See, before you can even dream about those big gains, you have to build a solid base. In any kind of investing, a shaky foundation is just a recipe for disaster. So, the very first move isn't about chasing some crazy overnight win. Nope, it's about playing defense. We're protecting that initial $100 by starting with the biggest, most established names in the game, Bitcoin and Ethereum. Think of these two as the absolute bedrock of our entire strategy. So, how exactly do we slice up that first $100? Well, the key here is balance. We are definitely not putting all our eggs in one basket. Instead, we're splitting our money to chase two very different goals. All right, so first up, we're taking $60. That's a solid 60% of our starting cash, and that's going straight into those safer foundational coins we just talked about. This is what creates our stability layer. And let's be super clear. This first $60 is not our ticket to getting rich quick. It's our shield. It's what builds that strong base, protects our initial investment, and gives us the confidence to take a few more calculated risks with the rest of our money. All right, so our foundation is set. It's solid. Now we get to the exciting part. Step 2, firing up the growth engine. This is where we switch gears from defense to offense. Now this is where that other $40 comes into play. We're going to deploy this chunk of cash into high-growth altcoins. These are the smaller, up-and-coming projects that, have the potential for way faster, more explosive growth than the big guys like Bitcoin or Ethereum. And this really gets to the heart of the trade-off, doesn't it? On one hand, you've got your safe coins, giving you stability and slower, steadier growth. On the other, you've got your growth coins, which offer that shot at fast gains. But that speed comes with a whole lot more risk and volatility. So with all that risk, how do we keep from just, losing it all? The answer is simple: diversification. Even with this smaller $40 slice, we don't just throw it all on one long shot. We spread it out over 2, maybe 3 different altcoins. That way, we have a cushion if one of them doesn't pan out. And now for step 3. I'm not kidding. This is, without a doubt, the most important part of this whole thing. If you nail this, you've got a real shot. But if you mess this up, well, those first 2 steps were pretty much for nothing. And here it is, the single biggest mistake, the number 1 reason people fail. After all that smart planning in steps 1 and 2, they don't lock in their gains. They see their investment going up, and they just let it ride. This mistake can undo everything. So why? Why do people do this? Well, it boils down to one simple, powerful emotion: greed. It's that little voice in your head that says, just hold on a little longer, it's going to go even higher. It totally clouds your judgment and can completely blow up your entire plan. You have to remember, the crypto market is, it's wild. It's incredibly volatile, and what skyrockets up can come crashing down just as fast. If you haven't taken any actual profit, a market crash will just wipe out all those paper gains, and you could be left with nothing. Okay, so listen up. This is the rule you have to live by. As soon as your initial investment has doubled or tripled, so your $100 turns into $200 or $300, you have to take some profit off the table. You're securing the win. It's not about perfectly timing the top, it's about having the discipline to actually lock in your gains along the way.
Okay, so there you have it, the 3 steps. But look, just knowing the blueprint isn't enough, right? We need to do a quick reality check on what it actually takes to make this thing work.
And I really need to be crystal clear about this. This is not a get-rich-quick scheme. While the growth in crypto can feel incredibly fast, turning $100 into 1,000 is a process. It's not a single event that happens overnight.
When you boil it all down, success in this game really depends on just 3 things: giving your investments the time they need to grow, having the patience to stick to your plan when things get emotional, and making those smart, disciplined decisions, especially when it's time to take profits.
And that's it. That is the entire blueprint in a nutshell. Step 1. Build your safe foundation with Bitcoin and Ethereum. Step 2. Fire up your growth engine with a couple of promising altcoins. And Step 3, the most important one, have the discipline to take your profits on a regular basis.
So that really just leaves one last question, and this one's for you. Now that you've seen the blueprint, you understand the steps, and you know the kind of discipline it takes, would you start this $100 challenge?